Hopefully you guys can hear me. Welcome back to another video. Um, I was gonna try to get this yesterday, but we did a little recap yesterday, and I just couldn't sleep. So it's literally 4 a.m. for me. Um, we in the big A, so you already know what's going on. Your boy can't sleep, so he's like, "Why not pull out his computer and record?" So my parents are asleep right now, so I'm gonna try to be a little quiet, but I'm gonna still get it done for you guys. You already know who it is. It's Luker. All right. Today we're going to be talking about fair value gaps, probably the number one confluence I look at before I take any trades. Fair value gap, fair value gap, fair value gap, fair value gap, right? We are looking at, there's over hundreds of fair value gaps. Like even if we go in the 5 second, you're going to see thousands maybe a session, right? So number one, what a fair value gap is. It's a 3 candle. Let me pull this out. Yeah, we can do this. It's 3 candles. Boom. 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 Then I'm gonna just do the bottom of the first and then the top of the third. Boom. This right here would be a fair value gap. I know that's not too great. In between these wicks, right? This gap right here where candle one's high or candle one's low, depends on what fair value gap we're talking about. So a bearish one, it'll be candle one's low. Does not align with candle three's high. If we're going bullish, candle one's high, let's just pretend this candle one, it would be on this side, but let's just pretend candle one's high does not align with candle three's low, if that makes sense, right? These wicks do not matter, the boom and boom. Obviously they matter about telling the story of this candle itself, but they don't matter in fair value gap essence. So really quick, let's find out fair value gap. Really quick. See, like when I see a very bullish run, like I already know fair value gap's gonna happen. And I'll show you guys 2 cases. Okay, so candle one's high does not align with candle three's low. Perfect. And this could be confusing because this candle 3 is higher than this, but we're counting the low. The low of the wick and the high of this wick. So make sure you're paying attention. Not the candle itself, blah blah blah. Right? Candle one's wick high, candle three's wick low for bullish. Then we'll go bearish here. And the colors do not matter as long as they leave a gap. We could have a bullish, bearish, bearish, bullish, 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 bearish, bullish. It literally does not matter as long as we're leaving a gap. So bearish case, candle one's low, candle three's high. Boom. Right? And obviously this gets ran through and creates an inverse fair value gap, taps back in, creates an inverse right here, re-inverses that, boom, very strong bullish run. Obviously we'll get into that later in the video. Give me a second, boys. Let's not rush here. All right. What fair value gap does is it shows inefficiency / imbalance. Basically the same thing, right? SIBIs, sell side imbalance, buy side inefficiency, right? Means basically the same thing. What it's showing is it's caused by aggressive buying or selling, depends if we're bullish or bearish fair value gaps, and the market wants to rebalance to it. Doesn't have to, but it wants to grab those orders and go back up, right? Number 2, I don't know why this is like this. Should be like this. There we go, right? Oh, I just zoomed in way too much, that's why. Okay, number 2, why fair value gaps exist. Smart money moves price fast. These institutions that are putting billions and billions of dollars into an order, I don't know to a single order, but in the session, is going to move price way faster than us retail traders that are moving price. Retail orders left unfilled, so that's why there's a gap. The market later returns to rebalance, mitigate inefficiency, fill remaining orders. This is why I capitalize. Fair value gaps are not entries by default. They are magnets. Does not mean you... Dude, I know someone that literally only trades fair value gaps on the 1 minute time frame. I'm just like, and he passes funded. I'm just like, that just proves anyone can pass their funded with just smart risk and knowing when to get out. It literally proves it. Because if you're only trading fair value gaps, which don't get me wrong, is my number one confluences. Actually, liquidity would be my number one confluence. Probably a very close second would be fair value gap. It's an important confluence, an important aspect into trading, but it should not be your entry by default, like this says. It's a magnet, right? It adds to your confluence, right? Number 3, time frame priority, very important. So that's why I was getting like 1 minute time frame fair value gap retracement, and you're getting in orders and you pass your funding. What? Like 1 hour retracements and then you're bullish? Cool, whatever, right? No, he was doing it on the 1 minute. Okay, higher time frame always overrides a lower time frame. Order of importance, obviously higher is going to go lower, right? If we want to go above weekly, monthly, sure. I don't look at monthly. I maybe look at weekly once a month. I don't know if that's too important. Like me doing that, I don't know if that bothers me. I mean, my trading speaks for itself. Daily, look at that, quite fair enough. 4 hour, look at that, quite fair enough. 1 hour, look at that every single day. Actually, 4 hour, look at it every single day. 1 hour, look at it every single day. 15-minute every single day. 5-minute every single day. 1 minute every single day. And then I barely get in the seconds. If we consolidate over and over and over again, I'll go into the seconds, try to look for a trade there. Okay, let me zoom in. Let's delete this. Okay, please tell me I can just drag this, right? Thank you. Okay, we'll delete this. Sorry about this. Give me a second, little chat. Give me a second, all right, little chat. All right, number 4, where fair value gaps matter. Not every single fair value gap's gonna matter, and even fair value gaps that I talk about in here that do matter are gonna be respected, if that makes sense. So high probability fair value gaps format after liquidity sweeps. Whether we sweep liquidity, then create a fair value gap down, right? We grab those equal high orders, and then we're very bearish down at session highs and lows, right? Where liquidities, and then at PD erase, which is premium discount, old highs, lows, equal highs / equal lows, higher time frame order blocks, previous days / lows. Really depends. So fair value gaps matter mostly where liquidity's at, right? So after we sweep liquidity, we'll look for fair value gaps. And then number 5 is all the way down here, right below these end dogs. And we'll create a video on end dog. Don't worry about too much if you don't know what that is. Just trying to get the basics out the way. And if you guys are keeping up with these videos, you are ahead of most traders. You know, most traders don't even know what a body or a wick is. That's how everyone starts, right? So sorry I didn't go over that. I might make a video on that if I get a suggestion on it. Other than that, I want to keep my community tight of people who are already kind of past the beginner month or beginner 2 months, wherever you're at, and kind of know what bodies and wicks, what stories they're telling, to where we can get into our confluences, to where we can get into fair value gaps, order blocks, liquidity, those sort of things. Okay, number 5, which fair value gaps are most likely to be mitigated, right? Ones that are formed by strong displacement. So I won't grab my boxes and candles, but let's just say, boom, boom, we're consolidating. We sweep this high, and then we're very, very bearish. You know, we're gonna probably get a pullback into a higher time. So say this is the 1 minute, and then it creates a 5 minute right here. We'll probably pull back into the 5 minute. We probably won't pull back into the first 1 minute. We might pull back into the 5 minute fair value gap, and then straight back down. I can't go back down anyways. So that right there. And the bodies of a fair value gap tell its story. Say the first one is a doji, then the second one is engulfing, then the third one's a doji. It's not too strong of a fair value gap. Now if we displace, it's a very strong fair value gap, and we may not even mitigate into it just because how fast we displace, and that's why I go to the 5 minute to try to catch a easier fair value gap, right? Aligns with higher time frame bias. Like say we're bullish, we create a bullish fair value gap, we're going to retrace into a bullish fair value gap, grab that liquidity in the higher time frame, that bullish equal highs or whatever it is. Resides in premium if we're bearish, and then or discount if we're bullish. So for here example, say we accumulated say the day overall was like this, and we're in the premium, we're accumulating in the premium, which is above the 50% mark. When we sweep liquidity, we create a fair value gap in the premium. We're going to mitigate back into it, retrace back into it in the premium, and then grab discounts lows, right? And then opposite for not discounts lows, we're just gonna grab discounts to lows, and then opposite if we're in a discount, boom boom boom, we're gonna sweep discounts lows and then go for those premium highs. Hopefully that makes sense. It kind of talks a little bit faster, but that's basically what I wanted to cover. And then tomorrow we're gonna cover inverse fair value gaps, which is killing December's price action, which is literally a cheat code for December's price action, and how I was able to make a good amount this week. So first I'll show you guys an example of a fair value gap that was important to me today in market open. If you guys traded with us live today, you know that we missed the entry by one tick, but it mitigated. You guys already know which one I was talking about. Yeah, we missed it by one tick, man. $1,000 trade, one tick. I made a video on it today. Okay, so here's where the highs were resting. The last high of the accumulation overall was right here, and so I said, okay, like I was bearish for the day, but changed my mind just on this. We ran through it, like I said, displaced through it. My entry, right, it's not my only confluence, right? If we run through it after sweeping the session lows, and we run through it, I know we're coming for like either previous day lows or previous week highs, or previous day highs, previous week highs. And I don't know where the liquidity was at, or where that other high was at. I think it was like around here or something like that. No, I was trying to catch a 99. I know exactly where it was at. I was gonna catch a 99 point trade. That's like 99.25 there. So it was right here. Promise you. Like if we go on the daily, I promise you it's right there. We went consequent encroachment because we ran through this. It's kind of like an opposite unicorn. So that was another confluence. Swept session lows, created CSD. We could have went here because how strong we displaced through this. This creates a breakaway gap. So because of this breakaway gap, and I can go over this as well. We could have went to the low of this breakaway gap. This price should not come back in as it shows literally right here. Catch a tighter stop, but I've only used breakaway gaps like once or twice. So my original stop was like right here. I knew most definitely we weren't gonna come into here, but we could have came into this inverse, blah blah blah. Anyways, multiple things. So we missed this because I wanted to go consequent encroachment of this fair value gap, which is 50%. Also, if price respects consequent encroachment, only wicks and touches it, or maybe a little below it or a little above it, and then flips back up, that's how you know you are very bullish, and price is going to respect that because price is respecting that, right? So yeah, that would have been our trade, and that's a little example. You can see over and over and over how price respects like your overall bias of the day with fair value gaps. You know, I was bearish, but people caught this trade before market open. Inverse right here. Marked out this wick. Taps 50 consequent encroachment of this wick. Creates an inverse right here. Taps back into this inverse. Also create a fair value gap to run to these highs. Perfect trade right here, but I don't get on that early. That's 30 minutes before market open. I don't like trading before market open. But this was a beautiful trade. One of my mentees caught this one. Beautiful. And he was done for the day before I even live streamed our trade. So yeah, that's the video. Hopefully this one was a little bit more enthusiastic. Lucas is bringing his energy out. You already know you already know how you feel me. 4:24 a.m. So I am a bit tired. That's why I couldn't bring it all out. But tune in with me tomorrow. Dude, today feels like Sunday. It's Saturday. Okay. We'll be trading Monday and Tuesday. Let me know down in the comments if you guys want in on our server completely free. I don't sell you anything. I just like to spread wisdom and teach other people how exactly I trade. I'm not saying I'm the best trader, but I'm saying I'm profitable and I know how to trade. But yeah, that's it for the video. Catch you guys later. Please like and subscribe and share with others as I'm trying to grow. It's one of the most important things. But yeah, guys, I'll catch you later. Lucas out. Peace.